Hi friends, I welcome you to yet another lecture in our current affairs series on the finance section of upcoming RBI Grade B 2019 and SEBI Grade A 2019 examination. The topic which we are going to decode today in the form of MCQs is loan securitization by NBFCs. So before proceeding forward, just let me quickly tell you that if you are a paid subscriber of our courses, you will automatically get this video along with a detailed coverage of the notification in your course itself. Now, before proceeding forward, let me quickly tell you about the excellent results that we have achieved over the past few years. Now, in 2017, in RBI Grade B, we had 27 final selections from our students, and in NABARD Grade A, we had 11 final selections from our students. And in 2018, we repeated the same success story. And in RBI Grade B, we had 70 plus final selections, and in NABARD Grade A, we had 26 final selections. Also, in 2018 SEBI Grade A examination, out of the total 84 selections, 41 of our students they made it to the final list, and in the IBPS AFO examination, our students have got 100 plus interview calls. Now, if I talk about the different individual courses that we are providing, then they include RBI Grade B, SEBI Grade A, NABARD Grade A, RBI Assistant, and IBPS AFO examinations. Now, apart from running the separate courses for all those individual examinations, we are also having some combo courses which you can avail. So we have a combo for RBI Grade B, NABARD Grade A, and SEBI Grade A. We are also having a combo for RBI Grade B, NABARD Grade A, SEBI Grade A, RBI Grade B, and NABARD Grade A and SEBI Grade A. So we have all the requisite combos that you can choose from, and you can choose the appropriate course as per your requirements. Let me also tell you about our new course, which is very important for all the banking exams. This is the QRE course. QRE, that is quantitative aptitude, reasoning ability, and English. So all these aspects which are very important for all the banking exams, they are going to be covered in this particular course. So let's discuss some of the MCQs which can be framed out of this particular topic. So friends, let's start with the first question on this particular notification, which is very important. RBI has extended minimum holding period requirement for NBFCs to raise funds via loan securitization. As per the notification, non-banking financial companies or NBFCs, they have been permitted to securitize loans. Options are of over 4-year maturity after holding them for 9 months on their books, of over 5-year maturity after holding them for 3 months on their books, of over 5-year maturity after holding them for 6 months on their books, or none is incorrect. So friends, this question is based on the crux of the notification which is being talked about in this particular video. So friends, this is the notification in very simple terms, in very simple words we have decoded for you. RBI has extended minimum holding period requirement for NBFCs to raise funds via loan securitization to help the sector overcome liquidity shortage. So there are plenty of new terms in this particular sentence. So RBI has extended the minimum holding period requirement. So this is the first term which is important here. And then it talks about loan securitization and it talks about overcoming liquidity shortage. So loan securitization, let me just quickly tell you about this one. And we are going to learn more about this in the next slide as well in the next question. So loan securitization means that if the NBFC it has granted say loans worth rupees 100 crores, what it does, it converts these into 1 crore securities of rupees 100 each, and these securities they are issued to people wide and large. They are issued to businesses, they are issued to big investors. So by doing this particular thing, the NBFCs is able to obtain cash or is ordered to obtain financing by distributing its assets or its loans in the form of securities to large number of investors. So since it results in obtaining of funds or obtaining of cash, this helps in overcoming liquidity shortage. Now, according to the RBI guidelines, it is provided that NBFCs cannot readily convert any asset into securities. It has to follow some minimum holding period requirement. So this requirement it has been kept 6 months. So after 6 months, you can convert that particular asset or loan into securities. So it cannot happen on day one, you granted a loan and on day two, you convert it into securities. So this kind of thing cannot happen. You have to keep that asset at least for 6 months in your books. So NBFCs have been permitted to securitize loans. Which kind of loans? Which are having over 5-year maturity and they must be held for at least 6 months on their books. Now earlier what was the position? Earlier they were supposed to hold these assets for at least 1 year. So now the relaxation of 6 months, which was earlier granted in one of the previous notification issued by RBI, this early relaxation, it was valid only till 31st May 2019. This relaxation has now been extended. So this relaxation is now going to be extended and it is going to apply till 31st December 2019. So this is the context of this particular notification, that this relaxed norms it is going to apply till 31st December 2019. So this is the crux. So friends, now we can easily answer this question, that as per notification, NBFCs have been permitted to securitize loans of over 5-year maturity after holding them for 6 months on their books. So answer to this particular question is going to be option number 3. Next question. RBI has extended minimum holding period requirement for NBFCs to raise loans via loan securitization. As per notification, it has been decided to extend the dispensation provided therein till options are 31st October 2019, December 31, 2019, March 31, or none is true. So friends, this we have already discussed on the previous slide. Let's just quickly take a glance. So friends, we have discussed on the previous slide that this dispensation, it was previously valid till 31st May 2019 and it is now being extended to 31st December 2019. So now we can easily answer this question. That answer is going to be option number 2, December 31, 2019. Next question. RBI has extended minimum holding period requirement for NBFCs to raise funds via loan securitization. The impact of the move on their liquidity would be, options are increased liquidity, decreased liquidity, no change in liquidity, or none of the above. So I believe you already have a faint idea of what this concept being talked about and about the impact of liquidity on this particular concept. So let's just quickly take a quick view of this particular concept. So friends, the relaxation in the minimum holding period requirement is going to primarily benefit housing finance companies and NBFCs which are offering mortgage loans where the tenure is typically more than 5 years. So for mortgage loans, the tenure is typically more than 5 years and these are going to be primary beneficiaries of this particular notification. How they are going to benefit? They are going to benefit because now they can readily convert these loans or assets into securitization and this is going to provide them with additional liquidity. So friends, now we can easily answer this question. That answer is going to be option number 1, increased liquidity. Next question. RBI has extended minimum holding period requirement for NBFCs to raise funds via loan securitization. Minimum retention requirement for such securitization transactions shall be dash of the book value of the loans being securitized. Options are 10%, 15%, 20%, or none of the above. So friends, a very important concept is minimum retention requirement in the context of this particular notification and the securitization process by NBFCs. Now this minimum retention period is primarily designed to ensure that NBFCs which are converting their loans into securities, which are converting their assets into securities, do not just convert their entire loan into securities. They must have a continuing stake in that particular asset. So this minimum retention requirement is to ensure that they carry out proper due diligence of loans to be securitized. So this minimum retention requirement for such securitization transaction has been kept at 20% of the book value of the loans being securitized. So NBFCs must retain minimum 20% of the book value of the loans before securitizing them. So they cannot simply securitize the entire amount. They have to keep 20% with them. So friends, the answer to this particular question, as we have just learned, is going to be 20% of the book value of the loans being securitized. So answer is going to be option number 3. Next question. In the process of loan securitization, dash is set up which pools the assets and issues debt instruments. Options are special purpose vehicle, securitization fund, underlying agency or loan manager. Special purpose vehicle is SPV. So friends, in the context of loan securitization, this entire process, it becomes very important. So let's just take a quick overview of this entire process and arrive at the answer to this particular question. So friends, if you talk about loan securitization, many banks and lenders, they have receivables from different segments. So banks and NBFCs, they have granted loans to different segments. They can be auto loans for purchasing of automobiles. They can be student loans for education. They can be equipment loans to businesses. They can be housing loans, credit cards, or trade leases. They can be in any form. Now with the process of securitization, we are able to convert these loans into securities, or what we call them debt instruments. Now for executing this entire process, a special entity is to be formed. A special purpose vehicle is to be formed. A special purpose vehicle, or SPV, is created. A special purpose vehicle is set up and it pools these assets, these loans, and issues securities in lieu of these assets to the investors. And these instruments, they are technically referred to as pass-through certificates. And when the original lender, say bank or the NBFC, it recovers money from the original borrower, it passes that particular money to the special purpose vehicle, and the special purpose vehicle is going to grant this money in the form of income to the investors. Further, in order to ensure that these securities, they are credit worthy, they are not bad securities, they are to be rated by the credit rating agencies, which would tell the investor about the quality of these securities. So friends, if we now arrive at the answer of this particular question, it is going to be option number 1, special purpose vehicle, or SPV. So guys, this was all about our discussion. If you are having any query, you can mail us at hello@edutap.co.in, or you can reach us at 8146207241. You can call us or you can WhatsApp us. And I would also recommend that you visit our website www.edutap.co.in for regular updates and important content on the respective examinations. Thank you guys. I wish you happy learning and all the best from the entire team.